Morning everyone, welcome to another Compliance Over Coffee. Last one of January 2024, where has this month gone? So this morning, to finish off our series for this month on setting up your business and just beginning to run, sort of process that we've gone through, I thought today we'd talk about the first 12 to 18 months-ish running costs and what you may not have thought of, and how important it is to have a really strong handle on this, firm control on this, regardless of how much cash you've got in the bank. Because what I do know from experience is that when you have cash in the bank, you will be quick to spend. You will think you've got a lot of cash in the bank and you can go out and splash it on all sorts of different things. Now, there are some fixed costs that you can't get around in those first 12 to 18 months, so let's have a look at those. Your fixed cost for the first year obviously is your setup compliance, which is around about the £1,100, and it will be about the same in year 2. You will have to renew your training on data protection and anti-money laundering, and at the moment with us that's £95 per person. You will have to keep all of your documents up to date, and you will have to stay up to date with changes in law and regulation and interpretation. However you choose to do that, that's up to you, but if there's a cost involved in that, then you're going to have to allocate that as well. Now, you've also got, if you are a limited company, potentially accountancy fees. And ours for each of our, for our sourcing business is £1,200 a year. Now, we choose to pay that monthly at £100 a month because it eases cash flow for the sourcing business. And if you've been in sourcing for a while, you'll know that it's not regular income sourcing, it's chunks. So you could go several months with no income and then a lot of money all of a sudden coming in. So we choose to split our accountancy payment into monthly payments. They send us an invoice, it's on direct debit or a standing order, one of them, and the money automatically goes out. Now, that is just for accountants and for your compliance. So what else do you need to think about? You need to think about something called corporation tax if you have a limited company. Because if you earn, you will pay corporation tax, dependent on what those outgoings are and dependent on whether your company runs at a profit or not. Now, in year 1, that may not be the case. It depends on if your company has had to buy equipment such as laptop, printer, whatever other equipment you decide to purchase. So if your allowable spends exceed your income for year 1, you will run at a loss. And so there will be no corporation tax to pay. And that loss can be carried over to the following year and allocated against any profits for the following year. Not that I'm an accountant and I can give you advice on this, this is just experience. So if you operate at a profit, you're paying corporation tax through a limited company at 19%. And what we do is we allocate 20% of income to move it into a separate pot to cover for corporation tax allowance. Quite often it doesn't run to the full 20% because we can offset things about it, but if we allocate the 20% and we have more than we need, it's better than not having enough. Because what a lot of people make the mistake of doing is thinking that all the money that comes into the account is theirs and they can pull it and draw it. But then sadly, when it comes to actually your end of year accounts, you owe HMRC corporation tax and you don't have the cash there to pay it. So think about it up front. With the modern online banking, and we use Sterling, there are a lot of many others, you can, on your app in your phone, create sub-accounts without asking for permission off your main account. And the way that we control our expenditure, our allocation, is that we move cash from the main account into these allocation buckets or separate folders, separate accounts, whatever you want to call it. And we have a corporation tax one. For the National Association, we have a VAT one. And for all of them, we have project ones such as marketing budget, website development budget, admin assistant budget, all sorts of budgets that each time we have money coming in, I allocate percentages into each of those separate folders for what it is that I want to do in the business. So you need to be very, very careful and think about when you earn cash in your sourcing business, it's not just all yours to spend. There are other things that you have to think about, or you're going to end up where you've pulled it and you've spent it and then you don't have money to pay everything else. Now, we've only talked about your compliance setup and about accountancy fees. If you choose to use any software, we use Xero for our accountancy, and at the moment that is, I think, £34 a month. If you choose to use a CRM system, we did use Zoho, it was £54 a month. You can start off with something as simplistic as a spreadsheet if you would rather, or if you want something that's a little bit more than a spreadsheet, but not quite the prices of a lot of the other CRMs out there these days. One called Less Annoying CRM was about $9 a month. It might be about £10 or £11 a month now. But whatever you do, keep your budget low as possible, and work with as little systems as possible. There are some that are absolutely necessary. Electronic due diligence is one of them for you. But use a system where you can, which is pay as you go. But just be very, very careful as to which check level you use, that you understand what it does and that it fulfills your criteria. So we have an old-fashioned spreadsheet for monthly outgoings and annual outgoings for each of our businesses, which gives us cash flow projections for the business dependent on income and projected income. Now, you don't need to go that far, but what I strongly suggest that you do is that you log each thing that you purchase and pay for, which is going to be recurring. So your insurance, your redress, your ICO, your HMRC, accountants, which will be recurring, any software payments which are recurring, and it will build a picture up for you as to how much money will be going out each month, quarterly, annually, and you can project going forward how that may change, because you may well decide that you need better quality systems, more systems, a new laptop, whatever it is. But allocate budgets for these out of that cash that comes into your bank account. Don't think that all of the money that comes in from your first sourcing deal, you can pull it and go spend it. If you're a sole trader, you can do what you want with it, but you're still going to have to declare it to HMRC for personal income tax purposes. As a limited company, as I say, there are corporation tax restrictions on this. So that is your first 12 months. Just duplicate it for the first 18 months. Move it out to the first 18 months. So when you've done it for the first 12 months, just extend it to 18 months, even for the first 2 years if you like. And try to predict what level you want to be at in that 18 months to 2 year period, and what systems you'd like to have in place and how much income you'd like to have, and have a projected column and then an actual column, so that you can gauge in your spreadsheet, if that's what you're using, what you were projected you would have and what your actual actually was and what the differences was. Doesn't mean to say that you've failed if you haven't met targets. Quite often we set really high targets for ourselves. If you've had any income in from sourcing in the first 12 months, you're doing incredibly well. Well done, pat yourself on the back. So that's it for Compliance Over Coffee this morning. I hope it helped a little bit. We will be back with you next month with a whole new topic to cover, starting next Thursday at the usual time, 8:30 in the morning. This evening in our NAPSA group, we have a live webinar for all NAPSA members, which is only for NAPSA members and is recorded for them to be able to watch, and will be located in the hub if any of you guys are watching this now live or on catch-up. And if you check your emails, NAPSA members, you will have an email invitation in your emails. That's it for now. Have a fantastic weekend, and I will see you next week, Thursday, usual time. Bye for now.